From the California State Senate, this is Senate Spotlight.
Well, hello everyone, and welcome to this segment of Senate Spotlight, where we discuss legislative priorities, policy, and other related issues with members of the California State Senate. From the state capitol here in Sacramento, I'm Brian Green, and joining us this time around, actually for the first time here at our desk, is State Senator Bob Wieckowski of Fremont, the 10th Senate District. Welcome, sir.
Well,
good to have you.
Thank you for having me today, Brian.
The proud chair of the Senate Environmental Quality Committee.
And looking forward to more legislation that affects our environment, improves it coming up next year.
And we will actually watch how I segue this into some of our fiscal environment and our consumer environment. We'll talk about that. Just very quickly setting the scene here, you were in the last couple of weeks of session as we speak. You've had 8 months to reflect on your transition from the Assembly to the Senate. How you doing? Things going okay?
Yeah, my agenda of package of bills, we'll talk about the economic equality package of bills, but I have a climate adaptation bill, some other fixes. I think you improve as a legislator, whether you're in the Assembly or the Senate, as you're here for a longer time, like you would as a doctor or a construction worker, that you just get more expertise and you understand what's doable, what's not doable, and you get a good read on your colleagues.
You, of course, had a career, obviously, before you came to the legislature. You were a small business owner. You served in local government. You were also a bankruptcy attorney, and how appropriate we can talk about that for today's discussion. Tell me about that experience and the clients that you had, meeting people really, I guess, at one of their most difficult times in their lives, when they're really sort of at their lowest. Talk about that experience.
Yeah, I mean, some people go into the law to make a lot of money or to smooth their ego. I was fortunate. My first job out of college was working for Don Edwards, who was a congressperson who wrote the 1978 modernization of the Bankruptcy Act. So I had an interest in that politically, but also realized that, again, when people their financial world has been shattered and they need somebody to guide them through this course. So you really feel as a practitioner that you're helping people at their lowest. But one of the goals of bankruptcy and just financial reform is to get people back on their feet, dust them off, and say, go back in and be a productive member of society. And the United States has always had a very liberal, progressive bankruptcy perspective, because we understand that some businesses fail. We understand that sometimes people get hit with financial tragedy, but you're not one and out. We want you to get back in and be productive members of society and really have a fresh start that's meaningful.
Well, from that experience and seeing people sort of teetering on the edge economically, you have come here in this Senate. You're crafting a set of bills that will help consumers facing bankruptcy and also otherwise trying to stabilize their financial lives, the Economic Equity and Financial Stability Initiative. But let's step back very quickly just to kind of set the scene. This country, the state's making great strides economically since the recession, but not everybody. Elaborate.
Right. Well, I mean, remember, the legislature has taken some steps. We've got the earned income tax credit, and we've raised the minimum wage. So there's public policy changes that we can, but that costs our treasury. The income tax credit means that we're not going to be able to collect that tax. What I've focused on is consumer debt, and look at these people that, we talk about that safety net, and these are people that fall through the safety net. So I'm looking at a series of areas: wage garnishment, which hits some people, and in California hits them real hard. California bankruptcy exemptions. What do you get to keep when they liquidate your estate? And also this industry of debt buyers that come in and sue people and garnish your wages for some debt that may be yours, maybe not yours, but it's an increased activity that's going on.
Well, let's walk through them a little bit. SB 308, ensuring the fairness in bankruptcy. Give us some of the details on that one.
Well, what we've seen is we've seen some changes with trustees and with creditors that are affecting people's fresh start. We have, back in the day, we would have a reinvestment of your money. Let's say your house is sold in a judicial foreclosure, and the house is sold, the creditor's there, and you claim the homestead exemption. And we used to have a 6-month reinvestment because we wanted to protect you, because that creditor, you're not in bankruptcy, you're outside of bankruptcy. So we had a 6-month reinvestment since 1898, that's been the rule, that once you went to bankruptcy, it cleansed that. Well, a case came up in 2012 that said a bank had worked with a trustee that said, this person claimed a $100,000 homestead. They waited 6 months, 1 day, and they went back in and said, now give us the rest of that money, and that they were denied their fresh start. So we came in and we corrected that, and other changes that we're having with car companies where we're saying you simply file a bankruptcy and you breached your contract, and you've made all your payments, you have your insurance, and when you're in bankruptcy, how are you going to get another car financed? And you've been paying for 2 years on this, Honda, whatever you're driving. We said that's fundamentally unfair. Just that simple act. As long as you pay and as long as you have insurance, that's not a breach of the contract in California. So people can get to and from work.
Well, you mentioned the car payments. There is language in your bill about this Cornell study in 2006 that looked at the data of those who have gone through bankruptcy and looked at them a year later, and many of them are still trying to pay off these basic mundane debts, not to mention car payments. And it wasn't like they went back and got into more credit debt. They are still struggling to get out of their situation.
Right, let's face it. I mean, for a quarter of the people that live in the state of California, it's tough just to survive. Forget about you have credit card debt or you have any debt. You're just trying to put some food on the table for your family, pay for your insurance, and keep your car running and getting to and from work. We always focus on the very rich and the people that are success stories. I tend to focus at least on this, again, those people that are falling through that safety net that says, when you go into bankruptcy, we're going to give you a few more assets, or more realistic assets, like the value of a car would be $6,000, not $2,300. What's a $2,300 car? I don't even know what that looks like. Well, I know what it looks like, but we want something that's reasonable that can get you to work and get you back in the game and make you a productive member of society.
Now, I know the bankers and the debt collectors have said this homestead exemption that you have here with this bill sort of would allow the debtors to, I guess, shield hundreds of thousands of dollars in these homes, I think implying that people are trying to manipulate the bankruptcy process.
Yeah, it's ridiculous. I mean, if you look at the bankruptcy code, which they evidently haven't, the code says that you have like 1,237 days that they look at the money that you invested in. So if somebody, that's 3 years and 4 months. So if somebody were somehow going to try to take advantage of the California homestead, listen, Florida, Nevada, Texas have an unlimited homestead. If somebody is really conniving and they're gonna, like Burt Reynolds, and they're gonna take advantage of the homestead exemption, they're not gonna do it in California. They're gonna take their money and buy a house in Florida where they have an unlimited homestead. And Florida actually wants those snowbirds to come in with their big amount of money and say, buy a house in Florida and this is where you get retired. So it's a ludicrous argument, but it's mentioned by them.
Let's move to the other one, SB 501, the modifying the wage garnishment law. And this is particularly important for people who are just making even just a wee bit above minimum wage and the disincentive it creates with having their wages garnished. Talk about that one.
Right. I mean, again, most people never have their wages garnished. And you got to go back to 1968. You have LBJ in the White House, and we have our war on poverty. And before that, we didn't have credit cards. We didn't have a garnishment. People never garnished your wages. They just got a judgment against you, and then they tried to figure out how you're going to pay. So this new concept of garnishing people's wages came in, and the federal government said, well, you can't garnish more than 25% because that would be slavery or indentured servitude. So California, unfortunately, just rubber stamped and said we're going to have 25%. So philosophically, I disagree with that in 2015 because many more people, average people, they can payday loans, they've got all kinds of debt, and taking 25% to pay one single unsecured creditor is just unrealistic. So we tried to get a bill to reduce that to 10%, but that's not the bill. That's before the assembly right now. We have a tier rate. So we say, first, we have these localities that have passed minimum wage bills. We're going to respect that minimum wage even if it's above the California minimum wage. And then we're going to have this tier rate so that people that make $1, $2, $3 more, they're protected. They don't take 100% of their wages. And then it goes up to, I think it's $53,000 or something like that. So we say the lowest income earners are going to keep more money. And this is good for Republicans, and this is good for conservative towns because the money doesn't get garnished from my paycheck and go out to Wisconsin or Delaware. It stays in my community because people who are making $15, $18, $20 an hour spend every penny of their paycheck in their community, and that's the multiplier effect.
Are you in any way tying the hands of the bankers, of the debt collectors, or the retailers in trying to collect on valid judgment?
The debt doesn't go away. They still have their garnishment. They're just getting less money. I mean, I'm making a fundamental decision that's saying, I want these consumers, these voters, to have the money rather than this bank that somehow insists that they have to have 25% of your wages or they can't survive. It's another crazy argument that I think people, the members of the assembly, get that they say we need to give our working families some sort of relief. The debt doesn't go away. Just you get to buy some food for your kids.
Well, the final of the package, SB 641, this is really where we're dealing with some unscrupulous players here. It closes the loophole that utilized by the debt buyers who provide this improper notice about a judgment, and people don't find out about it until it's too late to act on it.
Right. I mean, we made some reforms in the debt buyer's practice because, remember, I owe money to a creditor and I default. Then that creditor goes, they take it to collections, then they go to the Los Angeles Bureau of Collections or San Jose Bureau of Collections, then they go to the ABC Collections. Then nobody wants this debt. In this industry, the debt buyers will buy this debt for 1 cent, 2 cents on the dollar. And a lot of times it's 3 years old. You don't think you're going to collect any money. And what we found out with the Federal Bureau of Consumer Protection is that they're doing these robo-filings. The attorneys generals have sued the banks about their suing all these people for the debt. And sometimes they get the John Smith wrong. It's a different John Smith. So the number one complaint that people are making is that I don't owe this debt. It's the wrong person. It's like 34% of the people saying, I got this judgment against me. So what the loophole is that all these go by default judgments, which means for the viewers is that somebody got sued, but nobody answered. And if you don't have an answer in 30 days, the judge and the clerk will just rubber stamp it and say you get a judgment by default, which means nobody showed up in court. Well, normally Americans, and particularly Californians, we embrace due process. We want everybody to have their day in court, right? So we find out that if the judgment's 2 years old, you're toast. You can't set it aside. You have to file a measure in equity. So what this bill does is very like a precision. It says you can go in under penalty of perjury and declare, I just found out about this, they're garnishing my wages, I'm not the person, or I wasn't served, and have your day in court.
These are three incredible bills for consumers. You, of course, have been a fighter for protecting and restoring court funding. Am I stretching it a bit to find a nexus between the lack of court funding and some of this disenfranchisement that the consumers are?
Well, I mean, the courts, we asked the courts, because we want, one of the questions is if everybody's coming in to set these defaults aside, is this going to inundate the courts? And the courts are saying no. I mean, one, the courts are committed to due process. They want people to have their day in court. And nobody wants, well, unless you're a debt collector, nobody wants to pay a debt that's not yours. I mean, it's remarkable to me that you could be paying somebody's debt that's not yours. So, we continue to fight for court funding to make sure that it's an orderly process that goes on, that the people have their day in court and they say, listen, I wasn't living here, or I never had an American Express card in my life. I wish I did. I never had one in my life. So.
You can't legislate attitudes, but don't you think in addition to legislation, attitudes in this country and the state also need to change regarding folks who are struggling to get out of poverty? You have the gentrification of our cities, you have pay inequity, disenfranchisement of folks. You have this attitude of, I'm out here to get mine, and I'm sorry about you folks, but you made choices, you got to live with it.
Yeah, and
do we have to change that attitude?
Well, it almost goes further than that, because it almost goes into the arena of punishment. You brought this on yourself, and you deserve to have this punishment. You brought poverty onto yourself, and one of our challenges is educating my colleagues and legislators, but also educating the public is that it's not that easy to get by in California. Hell, in the United States, given some limited income that people have. Prices are rising, and sometimes it's to no fault of their own. It's not this this lark that people go on that decide we're going to run up the credit cards and then file bankruptcy and we're sort of this devious mentality. Most of these people are hardworking. Some may lack sophistication. I'll buy that, but they want to do the right thing, and they feel guilty almost about saying, I can't make it. And most of the time when you ask a practicing bankruptcy practitioner these folks, they wait too long. You say, where were you 2 years ago? You should have been in here. And you're not being a good parent now because you're worried about this, that. You're up at 2 o'clock in the morning worried about all these things. And the societal changes about the attitude that let's get past fault and let's just look at it and say, okay, for whatever reason, you're in this bad situation and these are our neighbors. Let's make them productive members of society again.
Thank you for your education, not only for your colleagues, but for the rest of us and your advocacy on these issues. We really appreciate it. We are out of time. Want to have you back to talk about these and other issues that you are obviously focused on, which we've just briefly addressed here. So thank you, sir. Appreciate having you.
The pleasure's all mine, Brian.
Senator Bob Wieckowski, a Fremont State Senator, the 10th Senate District, and that brings it to a close of this edition of Senate Spotlight. So please join us next time around as we discuss important legislative issues and policies with the newsmakers and newsbreakers of the California State Senate. From the state capitol here in Sacramento, I'm Brian Green. Thanks for watching.
Thanks for watching Senate Spotlight.